Blood on Wall Street, but what about Main Street? It's one of the most famous market sayings, buy when there's blood in the streets. Our firm spends hundreds of thousands of dollars on data feeds, subscriptions, and off-market insights, not to mention employing a large internal and external team of analysts, consultants, and professionals in almost every field. But some of the best intuition I get comes from what I call OMI, outside of market indicators. All of my OMI indicators have not flashed that we're in tough or panic-like times like the bottom of 08, 2009, or the spring of 2020. To me, it says that there's not the proverbial blood in the main streets yet. Main Street Health Check. Let's start with the art dealers. I visited and spoke at length with one of America's high-volume art and sculpture dealers at his headquarters. His firm travels across the continent to road shows, boutiques, and events, many of which you might be familiar with or have heard about. I'll keep his name private to hold his identity and confidence. From what I'm told, there's absolutely no slowdown in rare, unique pieces at the high end just yet. The sales dollar volumes in art and sculptures are among the highest he's seen through many cycle downturns and slowdowns over the last 30 years. Even his sub $2,500 market pieces are moving near all-time highs. Now that could all change the longer the market sell-off and economic slowdown continues, but it hasn't yet. The luxury goods market. Many people know that I'm a big fan of getting fine wines at a big discount to its intrinsic value. Anyone who's had dinner with me knows that I love looking through the wine menu to find gems at under the market value. And it happens, especially post-COVID, as restaurants have not updated their wine menus, and many are using 3-year-old menus. I've tried to be a hawk at certain wine auctions in the past, and recently prices and volume of bidders in the recent auctions is the highest I've ever seen. For example, on the high end, a bottle of the wonderful 2016 Sassicaia that in 2019 sold for about $280 a bottle, delivery taxes in, is now being bid north of $1,200 per bottle. Not a case, that's per bottle. Even the 2012 Caymus Cab Sav, which could have been bought for about $100, taxes included, delivery in just a few years ago, touched $450 per bottle in the most recent auction I saw personally. I get the fact that cult followings such as Screaming Eagle are bid in the $4,000 to $5,000 range per bottle. It's a niche bottle with a great cult following. But for Caymus and Stag's Leap getting 4 to 5 times the 2019 prices, that just doesn't make sense to me. It tells me there's still a lot of cash on the sidelines for high-end and mid-market wine for people who are willing to pay for what they like. It's not just wines. Auction prices for high-end whiskeys and bourbons are also through the roof. The market for luxury watches, new and secondhand, continues to be near all-time high, but are starting to show signs slowing down. Now let's get into real estate. I'm lucky to live in one of the most livable cities in the world, Vancouver. I also look at it as one of the most speculative capitals of the world, whether it's for small cap companies looking for funding or international capital coming from China to offshore their assets to buy homes and inflate prices, especially on the higher end homes and properties. One of my telltale market pain indicators is the high-end Shaughnessy homes, generally trading north of $10 million per property, and vacation properties in Whistler. Both attract major international capital. Capitulation hasn't worked through either real estate market yet, but I believe it will. Airports. Look around you the next time you take a flight. Terminals are packed and airplanes are at full. Is it just overspill from pre-COVID bookings? I'm sure a lot of the travel is coming from prepaid tours from before COVID that are now working its way through the system. But let's look at a chart which shows RPM, which stands for Revenue Passenger Miles for the US carriers, and the associated load factor. The RPM reflects the actual number of seats sold on the plane multiplied by the distance traveled. As you can see, in the US air traffic, the RPM, the revenue passenger miles traveled, is getting back to about the 10-year average. And you look at the US air traffic load factor, it's nearing its last 5-year average. All the while, mortgage rates and home equity lines of credit have shot up in terms of borrowing costs. Granted, the increase in interest rates haven't hit a big proportion of mortgages as they are fixed, but they will during renewal time. Much of the general population is living paycheck to paycheck and has not felt the pinch that is coming, other than food prices, which have risen. The stress and austerity has not worked its way through most households yet, as the economy and jobs have held strong. Peak panic hasn't hit the markets yet. A lot of the data and indicators we follow, including these Main Street OMI ones, haven't signaled capitulation. Like in cycles past, major dips in the past have been great buying opportunities. And to be clear, I do expect that again, but not yet, as I see more downward pressure. I don't know when that will be, and there are many metrics I use, but I do know we aren't there yet. As I elaborate more in detail behind the paywall of my research, I believe we're just at the beginning stages of a very challenging time in the global economy. A time where I believe the US dollar will remain strong and likely a very challenging time for the global economy. But fortunes are made in these types of markets. Click the link here if you're ready to learn more. Stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.